Alright everyone, Cowboy Trades here and welcome back to the channel for another update on the market. So volatility has returned and the markets are frantically moving. Whether you're looking at equities, bonds, options, Bitcoin or altcoins, everything is making very large moves today. So we're going to quickly and compendiously dive into everything that you need to know. Before we talk about Bitcoin, I want to approach the altcoin market because just like we predicted in our previous video, Bitcoin and altcoins are in trouble. Ethereum is actually making the leading move today. Now, if we go over to Ethereum, we detailed this in yesterday's video, but Ethereum was just hugging this trend line, which has been holding the altcoin market up since the whole 2023 rally. Now, today we've got a bearish engulfing candle with Ethereum tanking 3.5% to the downside of this. Now, most altcoins are also following suit and getting a crippling crush to the downside. If we are coming over to the total altcoin market this week, you can see we've had a very nasty rejection, red green red formation with a bearish engulfing candle and a rejection taking place on the weekly EMA ribbons, the 200-week moving average and the bull market support bands. The altcoin market has just lost all of the major important oscillators and it is not looking good for altcoins whatsoever. But more importantly, like I said, Ethereum is absolutely tanking with this bearish engulfing candle. I think Ethereum is getting ready to move back down to the downside with a few pit stops round about 1,620 and another pit stop round about 1,370. But I wouldn't be surprised if the psychological levels round about 1,500 are the next major target that you should keep your eyes on. In terms of the total cryptocurrency market cap, before we move into Bitcoin, very similar structure to the altcoin market cap. As you can see, we are just hugging the 200-week moving average after a rejection on the weekly EMA ribbons and the bull market support bands. We are, of course, forming this massive head and shoulders pattern with a neckline down at the 1 trillion mark and a price target all the way down at 762 billion, which is approximately a 30% decrease from where we are right now. Now, let's dive into what is happening for Bitcoin. I want to dive into the lower time frames and what we should be focused on now before I show you a new chart on the macro time frame. I can't believe I've never seen this one before, but this one is absolutely terrifying. Let's start off on the daily time frame. So we are finally coming into contact with this major area which I've been talking about on my channel. This area starts to have confluence round about the 28,600 mark. That is where the bull market support bands are. The next major level to the downside from there is 28,000. The trend line, which looks very similar to Ethereum, this is the one which has been holding up throughout the entire 2023 rally. And of course, the 200-week moving average down here at 27,500. So guys, basically between 27,500 and where we are sitting at right now, 28,600, a major decision is about to be made in these markets. And if we do come over to our next chart, this is the most important chart we have been detailing about over on Bitcoin. Only now the 200-week moving average is coming into confluence with these last support boxes. Guys, the weekly EMA ribbons, the bull market support bands, the 200-week moving average, and this major resistance box, which was holding as support all throughout the topping phase in 2021 and 2022, when this was support early 2021, this was support mid 2021, this was support in 2022, and we obviously flipped this as resistance when we were coming into the bear market. We did come back up and double topped on this significant resistance box, and guys, we are sitting right at this box right now. It looks like with this bearish engulfing candle in the weekly time frame, we are steadily approaching these very important oscillators, trend lines, and resistance boxes. Additionally, on the daily time frame, if we are looking at the EMA ribbons, it looks like they're about to fire bearish. So there is a lot of volatility which is about to come in for Bitcoin, guys. If you thought that volatility was here right now, it's only just getting started. In fact, if we're looking at the historical volatility indicator, we are only down here at 19%. Moving on to our next chart very quickly, as we detailed in some of our previous videos, just a quick update so you can visualize the chart. You can see we are getting continuation back down to the downside after we did have that bearish MACD cross on the weekly time frame. Histogram bars are widening and moving back down to the downside. I really think this is going to be the next significant macro move back down to the downside. In fact, we did have a very quick SFP swing failure pattern with 2 bearish weeks over on the histogram bars on the MACD back in June, and then we rocketed back up to the upside. Why was this? Well, this was because of the hopes of the Bitcoin ETFs that have been launched. And since then, we have had news that the SEC has come out and said these Bitcoin filings are inadequate. Now, a lot of people at this moment in time in the past 24 hours are actually posting articles saying the SEC has delayed Bitcoin ETF applications until 2024. That statement is actually taken out of context and sensationalist because they are not talking about every Bitcoin ETF. They were talking about one specific Bitcoin ETF. I can't remember it off the top of my head, but not all Bitcoin ETF applications are delayed until 2024. This is not what I'm talking about. I am talking about how round about this region at 32,000, 100% quoted, the recent wave of Bitcoin ETF applications are deemed inadequate to be accepted. Now, let's move on to the monthly time frame, and I want to share with you a fractal which I have only just noticed. I have no idea how I've only just noticed this. I look at the stochastic RSI on the 4-hour, the daily, the weekly. I don't often look at it on the monthly. So let's talk about this chart, and like I said, this is absolutely horrendous. If we look at the stochastic RSI on the monthly time frame for Bitcoin, you can currently see this is actually at 90, and in the past few readings it has started to flatline. Now do bear in mind we've got about 14 days until we do get the next major update on the stochastic RSI reading, and if we continue to break down like we're seeing at this moment in time, then the stochastic RSI could have a bearish cross. And let's look at what this has previously meant for the Bitcoin price. But before we look at the previous reading, I want to take things back a notch. We have obviously just concluded the 2018 to 2021 bull run, but I want to look at how the stochastic RSI acted in the previous bull run top and then the next dead cat bounce that happened for the markets. As you can see, if we come over to 2017 to 2018, where the markets were topping out, you can see at this moment in time, the stochastic RSI had a double top and it crossed bearish after the double top right around here. And as you can see, when the monthly cross happened at the top of the bull run, we went all the way down to 3,100. Similarly, you can see back in 2021, we also had that bearish cross over on the stochastic RSI. However, instead of a double top in the stock started to roll down, we bounced back up, and once we had that second cross on the stock, we double topped in terms of the price instead of a double top in terms of the stock. But nonetheless, if you sold the monthly stochastic RSI flip up here at 65,000, I don't think that you would be too concerned that it went up to 69 and then all the way down to 15 where the monthly stock bottomed out. But here's where things get very, very interesting. After the 2018 bottom, the stochastic RSI went on a massive rally back up to the upside. And I'm sure a lot of people thought Bitcoin was ready to break into new bull market highs because it was only a 43% difference away from its previous all-time high after rallying 3.5x. Now, at this moment in time, we've only rallied about 106%. Do bear in mind, Bitcoin is more mature at this moment in time, and the bottom happened from 15,000 instead of 3,000. But nonetheless, the markets look very, very similar. You know, you had the top, you had the roll down, you had a big rally for 6 months or so. We had the breakdown, we had the bottom, we had the rally up for about 6 months or so. But then you can see, just when everyone thought we were breaking into new all-time highs, the stochastic RSI crossed bearish from round about 12,300 and went all the way back down to 4,000. Now, I know what a lot of people are thinking, and I know what a lot of people are literally about to comment. Cowboy, we only went down to 4,000 because of the 2018 Black Swan event. Well, that is not entirely true. Let's load up the US interest rates over on the chart. Why did Bitcoin start crashing once it topped out at this region right here? As you can see, the US cut their interest rates on the 17th of June 2019, and this was pretty much exactly where Bitcoin topped out. Now, Bitcoin capitulated 54% before the Black Swan event. So don't tell me we only came down to these levels because of a Black Swan event. Yes, that definitely accentuated the price action to the downside, but either way you're looking at it, US cut the interest rates, Bitcoin crashed 54%. What are the interest rates doing right now? Well, unlike back here where they were at 2.5%, they are all the way up here at 5.5%. Guys, the next interest rate cut will be absolutely brutal for the markets. This might actually be the first time, if you're new to the channel, you might actually have a notion that cutting the interest rates is bullish. Well, it is long-term bullish, it's not short-term bullish. A lot of people seem to think that cutting the interest rates is immediately bullish for the markets, and this is because a lot of people often listen to other YouTubers, other crypto analysis, and they don't actually back check the data for themselves. If you look at the stock market, if you look at the bond market, the options market, Bitcoin, altcoins, cutting the interest rates is immediately bearish, and in the long term it takes a lot of time to get the interest rates back down to cheap levels. But nonetheless, we're going off on a tangent. We are at a very, very similar situation in terms of market price, stochastic RSI, and the interest rates are pretty much double the rate that they were back when the interest rates got cut back over here, and we're very, very close to another drop in the stochastic RSI. Now, there's one more fractal I want to talk about for Bitcoin before we do move on to the rest of the markets. While we have removed the stochastic RSI from the screen, remember that these vertical bars represent capitulations in the stock on the monthly time frame. We've come over to the weekly, so we've got rid of the stock. Now, what I want you to pay attention to is the Gaussian channel over on the screen, and we're going to be specifically paying attention to this fractal over here. Remember, we looked at things such as the rates being high at these regions, rates getting cut. I personally believe rates are going to get cut round about Q1 2024. So this could be a very similar situation paired with the fact that we've seen that massive rally. We've seen this massive rally over here. We've rallied above the Gaussian channel, and also we've got the monthly stochastic RSI flip. I simply want to highlight that at this moment in time, you can see the Gaussian channels have flipped into green within the past 2 weeks or so, and the last time this happened, they flipped into the green, the price came back down to retest this, retest the midline, and it capitulated beneath the bottom. And once that was done, we were ready to move into the new bull market. And once again, this is just an interesting find. If you pair this one fractal with the rest of the fractals and the rest of the economic data and everything we've looked at so far on this chart over here, it seems like a lot of things are lining up the same way that they did back in this event over here. Let's move on from this. I want to quickly update some of the rest of the markets because the bond market is moving exceptionally quick today. If we come over to the US 10-year yields, they are pushing up almost up to new all-time highs. They're rocketing. US 2-year yields, they're getting continuation, and it looks like we've got a W pattern which will be taking us up into new highs. We'll talk about this in more detail in a separate video. And the iShares TIP ETF, the Treasury Inflationary Protected Securities, if the tips aren't safe, you can bet that your equities and your cryptos are not safe either. Tips, like we've been talking about on the channel, they did form this M pattern and they are breaking down just like we predicted. We personally think that we're going to get continuation down to this price target, a 1.7% drop, placing tips at new bear market lows, rocketing bond yields up even further, and with short-term bonds offering ridiculous returns, this takes attention away from risk-on assets. Now, if we move on to the equities, I really only want to talk about one thing in terms of the S&P 500. Yesterday, we had the FOMC minutes came out. I summarized this over on my YouTube channel in a quick 2-minute video yesterday. I recommend you go and check that out, but due to what the Fed was stating and due to the fact that the Fed are talking about keeping the interest rates at hostage, at least until 2024, it's looking like the markets are responding negatively to this. The IWM small cap stocks in the US are plummeting with bearish engulfing candle after bearish engulfing candle after bearish engulfing candle. I believe equities will soon follow with this. So for today, my friends, that is all I've got. The markets are not looking good today whatsoever. Just like we talked about, Bitcoin is looking shaky, but altcoins are looking much, much worse right now. And like we talked about 11 days ago, volatility is back. It is time for the markets to make their next major move. I'll see you in the next one, my friends. Like I said in the previous video, the markets were acting very, very boring for about 50 days or so. That's why I was a little bit inactive. Now volatility is returning and there is a lot to talk about. We are back with the more frequent updates. It's been your boy Cowboy Trades. If you enjoy the content, make sure to leave a like, comment, share the videos with your friends. I'm out. Peace.